Welcome to this video on taxation, presented by Kagiko & Associates as part of the Fast Track to Practical Accounting series. Today we are focusing on value-added tax, or VAT. Let's explore why it's called value-added tax. VAT is a tax levied on the consumption of taxable goods and services supplied or imported into Kenya. It's collected by registered persons who then remit it to the commissioner. Registration is voluntary if you supply taxable goods and services. However, it is mandatory by law if your taxable turnover reaches 5 million Kenyan shillings per annum. VAT works like this. Input VAT is the tax charged by your suppliers. Output VAT is the VAT on your taxable supplies. VAT payable is the difference between your output and input tax, which you then pay to the Commissioner of Domestic Taxes. There are different tax rates. The general rate is 16%. A reduced rate of 8% applies to petroleum products. A 0% zero rate applies to specific goods and services, like exports and agricultural inputs, allowing dealers to claim back input tax. Accounting for VAT involves issuing a tax invoice, deducting input tax, and maintaining records for a minimum of 5 years. Input tax can only be claimed by registered persons with a valid invoice and cannot be claimed after 12 months. Filing of VAT returns is due by the 20th of the following month. Filing is done on iTax, and KRA is implementing prepulation of returns with implementation of eTIMS. Penalties for non-compliance are significant. They range from fines for not displaying registration or keeping proper books, to fines and potential imprisonment for failure to file returns or making false statements. Withholding VAT allows the KRA to collect VAT in advance. Appointed agents withhold 2% of the taxable value when paying suppliers and remit it directly to by 20th of the following month. Agents provide suppliers with a VAT certificate to prove the charged VAT, which the supplier can use in their return. Withholding VAT returns are done on a weekly basis. Offenses under the withholding VAT system include failure to withhold, remit, or issue certificates. Appointed agents committing these offenses are liable to a penalty of 10,000 Kenyan shillings, or 10% of the tax due, whichever is higher.